Hello, welcome to this week's How's the Market, Pensacola. Well, we're in the middle of August, and all of a sudden, one of the things I kept talking about was going to happen actually happened. If we look at last week, it looks like Fannie Mae and Freddie Mac, have now decided that they are going to add a half a point to any and all refinances. And we're going to do it due to COVID. I told you, if you put due to COVID, you can pretty much say anything you want to. So, due to COVID, they are now putting a half a point. What does that mean? For every $100,000 that you refinance, they're going to charge you a $500 tax fee, whatever you want to call it. They're going to take some of your money. That's what they're going to do. They're going to take some of your money. So they now added that as part of the refinance due to COVID. So it's a tax. I saw that coming. I said that a couple of weeks ago. I was mentioning that coming because I know that as we come out of this forbearance, there's going to be a lot of people that are actually just going to want to refinance. Now, I'm not the only one seeing that. Fannie Mae, Freddie Mac said we are going to wind up doing the same thing, and we're going to charge you a tax for it. And looks like there's going to be some others that are going to follow suit. I'm waiting to see when that's going to flow over to the purchase arena. And they're going to say due to COVID, this is just going to be a fee. It's all because rates are so low. People are not making, the banks are not making any money off of lending money. So because they can't make any money off the interest rates, they're trying to turn or churn fees. And these fees are what's going to drive their bottom line right now because they see a massive refinance boom coming, especially as we come out of this forbearance. I did a whole webinar the other day on your options, your 5 different options to your forbearance, what you can do. And I'm going to put the link to that here in the show notes down below. Anyways, I kind of knew that was coming. That's the lending business. But here it is, August 17th? 17th. Yes, 17th. August 17th. So let's see what the market looks like in our area this week. Let's go. All right, for those of you who have never seen this show, I always start off with this slide. And what this slide says is if we have between 6 and 7 months worth of inventory, we have what they call a neutral market. If we have greater than 7 months worth of inventory, it's considered a buyer's market. If we have less than 6 months worth of inventory, it's considered a seller's market. What the slide does not say, and I always try and bring up every week, is if it says greater than 9 months, it's considered a hyper buyer's market. Less than 3 months, it's considered a hyper seller's market. Why do I bring all these up? Because both sides of the equation, both the buyer and the seller, need to understand that if it's a hyper seller's market, you can push a little bit more on the seller side, and the buyers need to understand how they're making offers. If it's a hyper buyer's market, then we've got to understand as sellers, it is that. So we have to pay attention to what we can and can't do. So this is a good baseline. Consider this slide right here as like your legend, all right, to where you can read the data that I'm about to show you next. And we are going to start with Escambia County. Escambia County. If you look on the left here, all these price points are your list price points. On the far right is the estimated months. That's why I show you that first slide first. So it looks like everything under $450,000 is a hyper seller's market. Excuse me. It's a hyper seller's market. Looks like between 450 and 500 has gone out of the hyper seller's market to just a seller's market. But then 5 to 550 drops back down to a hyper seller's market. But look at this. This pocket has been interesting for the last couple of weeks. Between 550 and 600, it's now 8.3. It's almost a hyper buyer's market, but it's not quite as of this week. We have to go 0.7 more to get 9 months or above to become a hyper buyer's market. So that is a buyer's market. That price point is a buyer's market in Escambia County. 600 to 700, we drop back down to a seller's market. It is not a hyper seller's market at that price point. It is only a seller's market. And then 700 plus, we go over the neutral and we're slightly skewed toward the buyer's market. So that needs to be paid attention to. That's slightly skewed towards the buyer's market when you get into the luxury. We don't have a hyper buyer's market in Escambia County as of this week. We are close with the 550 to 600, but as of right now, we do not. Most of this is a seller's market. Now, I need you to understand the average days on market on some of these are dropping drastically. These are your days on markets on average, and you're closed. Look at this. 150 to 200, your average days on market are 33 days. Market? I'm not quite sure what market is, but I think we understand that. I just couldn't talk there for a second. It's average days on market. 33 days. All right? Your average days on market for 2 to 250 is 53 days. And understand it's taking 30 to 40 days to close something. So that takes 30 to 40 days out of that. So if it's 53 days and we take 40 days out of it, it's actually an average of 13 days. Had a property day I showed twice, and both people were asking how long it's been on the market. It's been on the market about 24 hours, and there's 6 showings scheduled. Now it's floating in between this 2 and 250, so this exact price point that I'm talking about, where there's only 1.2 months worth of inventory. Now, don't get me wrong, there are some houses, 126 houses, but 289 of them are under contract. And this price point is your first-time home buyers or your move-up buyers, so people are really, really hunting in that area. So if they're really, really hunting, well, then, it's kind of tough to find stuff there. That's why I know this particular thing is selling. Here's your other ratio that I want you to pay attention to. I know on this show, I normally pay attention to price range and estimated months. When I sit down and talk with someone, I go over all of these numbers. But I just want to point this out. It's list to sell ratio. What is the list to sell ratio for the 200 to 250? Well, it's 99%. Something listing at 250, could it go for 247.5? Yeah, that's 99%, but the average is 99%. So it's not 94 like we see down here in the luxury. $700,000 taking 6% off of that may be okay. So $1 million property taking $60,000 off may be all right. That might be in the norm. But you get here in the 150 to 200 and it's selling between 100 and 99% of list price. Got to pay attention to that. Both sides of the equation. As a buyer comes to play, that one of the buyers that I met with on this one property was actually cash. She's ready to go. But when, we were on at 220 something, if I remember correctly, and she was like, well, for me, this property is only worth about $180. I get it. That's what she thinks that property's worth because of the work that she would have to do in order to personalize it to herself. And I was just very honest with her and said, hey, it's just not the property for you. Let's go find another one. This one's not it. It's been on for 24 hours. Is it 225 or 228 or 220? I don't know. I can't remember right now. But anyways, this just isn't it. This isn't the right property. It makes sense. Now I know some people will try and I can't think of another word, but blow smoke to try and figure out why this may be and just get you up. Well, maybe it's not. Maybe we're just not there yet. Maybe that particular property is just not there yet. So let's go find something else. That's me doing my job for my clients, at least the way I perceive it. And I've been doing this since '93. So, yeah. Anyways, let's jump over to Santa Rosa County. Santa Rosa County, if you remember, last week, 0 to 50,000, there was nothing. So at least we have 0.6 because there's one property active. Fairly certain that's a lot. Everything under $550,000 is a hyper seller's market in Santa Rosa County. The 550 to 600 jumps up. It's not to the 8.3 we saw in Escambia County. It does jump up from a hyper seller's to just a seller. So it crosses that 3-month threshold. All right. So it goes to a seller's market. Then 6 to 650 drops back down to a hyper seller's market. And then 650 to 700 drops or goes back up to just a seller's market, so slightly under a neutral, and 700 plus is a neutral market. As of August 17, 2020, as we start this week, we do not have any price point in Santa Rosa County that is a buyer's market. Nothing. Zero, zip, zilch, nada. Nothing. So again, I say all this so that you understand things. As a buyer, you understand things as a seller. I want you to reach out to me if you're looking at making any moves because this information is put out there for you to make good decisions, but also to understand more in depth of what you can and can't do in these markets. If you're a buyer, like I said, if you're a buyer and it's $200,000 and it's been on the market 36 hours and you want to come in and offer 140, I'll be honest, you're wasting your time right now. You're wasting your time. If I was sitting here saying, hey, the property's been on the market for 180 days, 190 days, it's never moved in price, maybe we can start talking about some negotiations down. Because now the market said something's wrong with the property. And maybe we need to talk about a renovation loan to where we can renovate things to get it to where it looks what you want and roll all that into the loan. Okay, maybe that's what we need to be talking about. But coming in at 40% under price, it's not there. And I want to address, I've addressed this a couple for the last few weeks. I want to address the thoughts out there that we are going to see this massive foreclosure crisis. We are not. We are not. Will we see some foreclosures? Sure. Will we see some short sales? Sure. That's why I did the whole webinar that I did so that people understand, hey, out of forbearance, if you have completely lost your job and there are things we cannot do, do not suffer in silence. I did that when I lost my home in a foreclosure in the financial crisis in 2008. I didn't reach out to anybody. I suffered in silence. Don't do that. It makes no sense. I've been there. I'm not here to judge anybody. I'm the last person to judge folks. Instead, I want to show you different ways to relieve that pressure and possibly even come out with some cash in your pocket. Will that happen? Sure. Will we see maybe some short sales come up? Yeah. But like I've said for the past 4, 5, 6 weeks, when you listen to JP Morgan Chase's quarterly call this quarter, Jamie Dimon, the CEO of Chase, came out there saying, our average portfolio is only 56% loan to value. Well, if it's only 56% loan to value, we're just going to refinance. That'll probably be the best option. And if your rates are in the 4s now and you can refinance into the 2s, maybe that 0.5% fee they're going to charge you to refinance, it just makes sense. It might just make sense. That might be the best option for you to keep the property. But let me tell you, stuff is selling. As you can see, I mean, look at this, 200 to 300. The 200 to 300 price point in Santa Rosa County, if you look at list to sale ratio, both of them are 100%. 100% list to sell ratio. As long as we price it right, and we can even push it a little. There's a couple properties I listed here lately where I'm pushing a little because I know these are right and I know there's not much inventory. So I know that we can capture some appreciation right now, which is something that most people don't want to look at. They only want to look at the past. When I say they want to look at the past, I want to say as they're just like an appraiser, they're just going to go look at the past sales, average up the price per square foot, and then tell you what your property is worth that way. They're not giving you any value for appreciation since those sales. That is leaving money on the table for a seller. That just is. It just is. Sorry about the cost this afternoon, but well, I guess we got to get those. Anyways, that is the market this week. I put this information out so that you can have information for you and your family, and you can get the data to make a good decision for you and yours. If you're thinking about doing anything in the next 6, 12 months, reach out. Send me a message on this. Let's start talking. Just like I said last week, I've had even more calls this week saying, hey, I saw the show and I hear that people are talking about January already. Yeah, they are. Yeah, they are. There's some people that are talking about January already with me. They're wanting to put game plans together to sell a property in January. Okay, let's chat. Let's have a conversation. All right, if you're looking at doing anything in the 6 to 12 months in my area, reach out. If you're watching this and you're not in my area and you don't have somebody you're working with, reach out. I'll see what I can do to help. I got a pretty good network across the country. So let me know. Thanks for watching. Have a great week. I'm a man on a mission. My mission is to help people break through all the noise out there. And don't need no permission. I want to help you get to actual truth. Don't you just want the truth?